Hi friends, welcome to my channel, and in today's video we will be discussing about the important metric in retail, that is return on sale, and also we will see how to calculate it. So in every business the main aim is to make the sales and do the profit for the organization. So to measure this, the return on sale is a very important metric to understand the operational efficiency of the organization. So what is return on sale? Return on sale is the ratio between operating profit and its net sale. So it defines how efficiently the company can generate the operating profit from its revenue. So this was the definition of return on sale. So now let us understand the formula to calculate the return on sale. Return on sale is obtained by dividing operating profit by net sales. So operating profit is the profit incurred in the business operation before the interest and taxes are deducted from it. And the net sales are the total income made by the company by selling its products and services to the customers. So return on sale is also known as operating profit margin. So we can say that if the company is not doing business to recover the investment, then that business is undergoing loss. Consider that the company has a total operating expense of 30 lakhs and the company is making sales of 50 lakhs. Now the operating profit of the company will be net sales minus operating expenses, that is 50 lakhs minus 30 lakhs. So the operating profit is 20 lakhs. So to calculate the return on sale, we need operating profit and net sales. So here in this example, the operating profit is 20 lakhs as we have calculated and the net sales is 50 lakhs. So the return on sale will be operating profit divided by the net sales. That is 20 lakhs divided by 50 lakhs is equal to 0.4. So now we have to multiply 0.4 by 100 so that it will be 40%. So in this example, the return on sales is 40%. Here we should note that the company which is making 50 lakhs of sale with a 30 lakh of operating expense is more profitable than a company which makes a business of 90 lakhs with 80 lakhs of operating expense. So higher the return on sale, the more profitable will be the company. So now let us understand why return on sale is such an important metric in the business. Firstly, the return on sale is used to compare how companies operate within the same industry. Also, return on sale is used to understand whether the company is making profit or loss. And finally, return on sale is used to compare the performance of the business in the current fiscal year with the past year. This will help the company to analyze the progress of the company or the business. So friends, this was all about return on sale. Hope you liked the video. If you liked, then please hit the like button and please subscribe to my channel and comment down if you have any suggestions. Thanks for watching.